Welcome to Cerulean Trading. Yeah.
Hey guys, it's Czar here from Cerulean Trading. Hope all is well. Happy Sunday to you. It's Sunday, October the 23rd. I'm just taking a look at a few things here, and I just thought I would do a quick little video and discussion on keeping things in perspective in terms of this market pullback, this bear market that we're currently in right now. I'm just looking at the Qs, the triple Qs. That's the NASDAQ. So this will be our proxy for the NASDAQ index as we take a look at a couple of things here. As many of you know, if you follow the stock market, we have now experienced a 38% pullback from peak to trough so far on the NASDAQ. And that is a very, very significant pullback. Of course, many of the constituents of the NASDAQ have been hurt way more than that. Many of them down 60, 70, 80, even 90 some odd percent. And we'll talk about some of those individuals in a different video. But to keep things in perspective, this is a weekly chart, so each candle represents a week. So we're really zooming out here and taking a look at the bigger picture. You'll see that the last time we had a significant sell-off was, of course, the COVID plunge in 2020, February, March 2020. And that was a 30.5% pullback, give or take, right? From there, we experienced this rampaging bull market. I'm going to come back to this in a moment. The last significant sell-off before the COVID plunge was way back here in 2018. It was in the last quarter, the latter half of 2018, if you remember, going into December, and it was quite a nice plunge, down 23%, and that hurt quite a few people back then. The plunge before that, or the sell-off before that, I shouldn't keep calling them plunges because not everybody experienced them as being such, depending on what you held within them, within your portfolio. The last one before that goes way back to 2015, and that was a kind of a grinding 18% pullback. So again, fairly high double digits. And right before then, in 2015 again, right? So we're here 2015 November. In 2015 in July, we had another 26% pullback with that wick down on the weekly right into the 200-week moving average. And then we go way back now. Again, this is about perspective, right? We go way back to 2008. This is a global financial crisis. It was a very painful period for many people, whether you were investing in stocks and other instruments, but also if you were investing in real estate, of course. There was a massive real estate, it was a crash. Let's just call it what it was. But in the NASDAQ, we experienced a 55% pullback from peak to trough. This is the global financial crisis. And then the big one before that, of course, was the dot-com bubble of 2000. The bubble was actually in the late 90s. The bursting of the bubble was in 2000. I believe it was March 12, 2000, approximately, the ultimate top of the NASDAQ. And then that was an 84% plunge in the NASDAQ. Again, many constituents really getting wiped out, down to 90 plus, and some of them, just completely wiped out, so down 100%. And certainly leveraged portfolios, and there was a lot of leverage at the time, got absolutely decimated during that period. But I want to bring you back to here. This is the present day, of course, over on the far right-hand side of the chart. This pullback has now almost erased the bull market that should never have happened. Now, this is the way I speak about it, and I was speaking about it at the time back in 2020 when this COVID plunge happened. What happened from there, this dramatic V bottom, should never have happened, but it happened because of central bank policy, Fed policy, and a concerted effort to stem the tide of sell-offs, tapping into the 200-week moving average, and then as a rocket ship blowing off from there into the stratosphere. And then that move, of course, I'm just going to measure it out here for you so you can see, the NASDAQ then proceeded to rally a full 147, call it nearly 150% from there. And it was quite a ride. And again, many of the constituents doing 2, 3, 4, 500% returns within that index and within the broader market, really the hot stocks during that time. I'm going to do a separate video on those hot stocks because where they sit now is a very, very different picture, even a different picture than this on the far right-hand side. Right? This is actually a modest sell-off compared with the hot stocks of this period. Right? Just to, again, keep it in perspective. But in my estimation, we're getting fairly close here to this market looking more comfortable and reasonable. Not even in terms of PE multiples or anything fundamental like that in terms of metrics, but in terms of this, right? Since this bull market, in my estimation, should never have happened, getting back to here, or getting anywhere close, is a much more reasonable situation. This is the froth. It's now virtually gone in the NASDAQ. It is completely gone in the Dow, and I'm going to show that to you now. Let me see if I get a clear chart. Yeah, this one will do it. This is the Dow Jones. This is a COVID plunge, right, of 2020, early 2020. And you'll see here that this bull market that should never have happened has now been completely erased. And right? We're now sitting on call it a support zone where previous resistance, key resistance, by the way, that prior all-time high before the COVID plunge are where prices are sitting right now and have already rebounded or have been rejected from that area. I'm not saying this is the bottom. It might be. We will let the market decide that. I'm also going to show you the S&P, see if I have a reasonable chart. Yeah, this is a good one too. These are CFDs, I believe. Yeah, I'm not sure how TradingView handles this, but it's close enough. Again, what you see here, this bull market that should never have happened, fueled by money printing, quantitative easing, is essentially completely eradicated. We're literally 2% from tapping this high. Does it need to tap it? No. Will it? It may. But this market is vulnerable. And I'm going to take you back to the cues here for a minute. This market is still very vulnerable. This is not necessarily the bottom of this move. We could absolutely see prices do one of these, and then one of these. And I would not be shocked if that's in fact what happens, because there's still a great deal of frothiness given the current environment that we're in, right? All the factors combined, and we'll talk about those in a separate video. I don't want to go on too long here. I probably already have. But I want to wish you a great rest of your weekend and hope to see you early in the week, whether it's the London Open, the New York Open on the live stream, or on some of the videos or our chat group on Telegram, the free Telegram group. Encourage you to join. It's Zerillion Trading, and we will talk to you soon. Have a wonderful day, guys. Talk soon.